Greetings, fellow investors. Welcome to Nordic Finans, where we help you realize your financial goals.
So if that's something you find interesting, please invest in the subscribe button and deposit a like on the video. My name is Marcus.
And I'm Lucas, and today we're gonna talk about 5 ways to find great companies to invest in. But before we get into the video, let me just know real quickly what are the methods that you usually use to find companies to invest in. Please let us know down in the comments below. So, let's get into today's video and today's topic. 5 ways to find great companies to invest in. Easier than you might think? Question mark. Well, it maybe isn't that easy, but we tried to find 5 ways that should be easy for the common investor or the new investor to still find a lot of good potential candidates. And this is just something I would like to preface before we get into it, that this is a way to screen for good companies, meaning that you're trying to fish in good candidates, but then you're going to have to qualify them further and read more about them, and from this you're going to have to basically sort out many bad apples to find the good ones.
Yeah, so basically you catch all the fish at first, but then you only keep the ones that are edible.
Exactly, that's a great way to put it. Thank you, Marcus.
Okay, so basically all of these are just how to find companies that could be interesting. So we're just gonna rank them by order, which we think are most important. And we might have forgotten something. Bear that in mind. So please let us know in the comments below if there's something else we should have thought of, but forgot for the purposes of this video. But the 5 points we have thought of in this video are: number 1, recommendations. Number 2, what is hot right now? What are people talking about? 3, we have associations, and on that note also what products that you are using or your friends loves to use. So basically power of word of mouth in a sense. And then the 4th point is bad news about the company. This can actually be a great entry point if you are thinking about investing into, say, well, one good example is Facebook. If you're thinking about investing to Facebook, maybe you should wait until they have some negative press once again, and then the stock price goes down for a little bit, and then you could jump in. And finally, Lucas is also going to talk a little bit about screeners and introduce us to that concept.
Yeah, exactly. But let's dive further into these 5 and further find out some good things with each method and some bad things.
Yeah, okay, so this recommendation might be raising a few eyebrows, because we're basically saying that you should basically base your investments on somebody else's opinion. And that's not something you're maybe so used to hearing, because people always say do your own due diligence, look into stuff. And we are also, of course, saying that you should do that. But when it comes to the screening phase, when you're talking about just finding companies, it is not very likely that you're actually gonna just browse through whatever your brokerage is offering and then find an amazing opportunity out of nowhere. Most likely you would find this recommendation somewhere. I don't know if you're using financial journals and looking there on instruments that are undervalued, or if you're just looking at YouTube and what YouTubers are recommending, like a company that currently might be undervalued. I've actually heard that when a company makes it to the news, then it's too late to invest into it because it's already overhyped. But if you just hear it on some YouTuber that has poured a lot of effort into finding the best opportunities for him or herself, you could also jump in. That could be a good idea to look into that company, and is this person right? Maybe though they, like us for instance, don't have a lot of subscribers and they've really found an amazing opportunity. It might be a good idea to look into this yourself and see, do you agree with them or don't you? And this is a decision you will eventually have to make yourself, and we're going to make a separate video on how to actually execute on these screenings. But we really recommend that you should basically keep your ears open and see what people are recommending, on different platforms, whichever platform you're using, and then look further into those options you find there as potential candidates. Remember, you don't have to actually make an investment. You can just look into them further and see, is this something that could interest you? Is this something that you agree could be a great investing opportunity? Or is this something that you should stay away from and not touch whatsoever?
Yeah, exactly. And again, I think it's so important that we keep reminding people now that at this stage of the investing process, we're only finding potential candidates, but we haven't chosen what fish to eat yet.
Exactly.
And what to throw away, like Marcus said. So So that's why like we're not so strict with the methods. We just want to find a lot of candidates that look interesting at this point. Let's move on to the next point. What is hot and what is not?
Yeah, and this is not actually a reality TV program, although the title almost sounds like it could be. Essentially what this is, when you're doing investing, you should be aware of that some sectors, some industries, are way hotter than others. For instance, electronic vehicles and plant-based food is right now all the rage, and people are talking a lot about it. Meanwhile, nobody is talking about printing anymore, like printing on paper or something like that. These are two separate industries and they get completely different attention. And this is warranted, I think, to an extent. Because electronic vehicles, plant-based food and all that, that is part of the future. It's probably going to be bigger because right now, for instance, people are very concerned about the environment, and everything that is relating to the environment in a positive way probably is pretty talked about, interesting to a lot of people. People will most likely want to get into those industries early, for instance, and try to find really good candidates that could be really big in the future, for instance. And nobody's really talking about printing opportunities, like who could be the biggest printer in 10 years. There might not even be a very big printer in 10 years because it's a declining market. And this is something that you could also take into consideration when you're screening for companies, like which companies do people think, and like the general market, because this is bigger than just like we spoke about some YouTuber, like what do you sell here? Like, do you think electronic vehicles will be a very big thing in the future? I think it probably will be. And then you could decide yourself if companies in this sector is something that you're interested into investing into.
I also wanted to add into this slide, is it too hot to handle as well?
Yes, exactly.
So what is hot, what is not, and what is too hot to handle. And I think with a lot of these sectors that are all the rage, like you said, there's huge risks as well. And it might be a good idea to take a look at what is not so hot at the moment, but that is still a solid sector in the long term. For example, banks right now, I think have been quite undervalued, or not.
Yeah, a lot of people have actually spoken about banks, because banks got a very bad rap, especially during the financial crisis, and they've been pretty quiet since then. But a lot of people think that they dropped a lot during the corona crisis as well, and they haven't really recovered at the same pace which they maybe should have. And I think that retailing is the same, that a lot of people are not talking about a lot of the retailing possibilities that are out there, because it's not as hot as electronic vehicles or plant-based food or
exactly, and that was the point that I wanted to make, that it might be that you find something great looking at what is hot, but personally I think you have a better chance when you look at what is not so hot right now, because everyone is going to be looking at what is hot. Sort of. But you could look at both, and you could be aware of both. But
and I think that's mostly the point of this segment, is that you should be aware of it. No matter what action you take, you should be aware of it when you're screening for companies. Are you looking for companies that are really hot? Are you looking for companies that are maybe not so hot, and that's the point? Or are you just trying to keep away from companies that probably will not even, or whole sectors that will not even be a part of the future? This is definitely something you should bear in mind immediately when you're looking for companies. So that's definitely why it warrants the second place, I think, on this list.
Yeah, so with that, maybe let's move on. So, association, what are products that you or your friends love to use? This, I think, can be best summarized by this statement right here. So, Marcus, when you hear soda, what is the one you think of?
Coca-Cola.
Yeah, I would say the same actually for me. And also, if you watch this, please let us know down in the comments what was the thing that came to your mind with that example. And what you're going to find is that for a few of the things that you use every day, such as soft drinks, such as maybe, I don't know, when I say pizza, you and me who live in Finland, what's the pizza brand you think of?
Pizza.
Exactly. So I think there's a few of these, or there's not a few, there's a lot of these.
And if you find companies like that, especially if you are more conservative and want to invest into proven companies, this is something you should be aware of.
Yeah, this is something that you should definitely not underestimate, and this is something that Warren Buffett has made a lot of money on, and he didn't even realize how much potential was in this concept until he met Charlie Munger. Charlie Munger was actually the one who really introduced him to this idea of like being a household name and being a great company and having like a space in people, a permanent space in people's mind, how valuable that actually is and how much money is in like the brand name as well, if it's a good brand.
I would compare it to the power of word of mouth. This is basically the investing part of that statement, because companies know that they can make a lot of money once they get into the, well, almost people's mouth in a sense, because when people start talking about it, that's when they can really break ground, and new ground and get a lot of new customers, because certainly when people are starting to recommend them, that is a very good sign for a company. For instance, I have a personal example that I was going to build my computer this summer, and I have a lot of friends that are very into computers, how to build them and all of this stuff, and they were all recommending the same thing to me: buy AMD. AMD is like very good. They make great stuff right now. And I was so convinced by my friends that I even made an investment decision based on this at a time that I don't think AMD, it was a little bit before the AMD spike, and I believe that AMD is definitely a company that was possibly even undervalued at that time. It might not be so much now, but what that proves is that basically you should really put emphasis when people in the know, especially when people that know what they're talking about are speaking positively about a certain company that has not reached its investing potential in something yet, that it's a little bit under the radar, so to speak, but it might break ground any moment, which is what I think partially happened with AMD, because I bought them at a very favorable price compared to what it would be if you bought it today, for instance.
Yeah, I think that's a great story, and in tangent to that, as you said, when people love a product, like that's way more interesting to me than if people love a stock.
Let's move on to the next point, I think.
Okay, so bad news about companies. As Marcus already said, this might go against your initial reaction on this might be like, what? Shouldn't it be good news about the companies? So contrary to what you might first think, bad news about a company, depending on what the news is, of course, can actually be a very good thing for you as an investor, especially if you are looking to buy. Because as we hopefully know by this point, Mr. Market or Mrs. Market is very hysterical and tend to overreact to the smallest little thing. So if you read something on the news and realize that, okay, this might be negative, but it shouldn't be that bad, they can probably fix this. In 5 years, this is not really gonna be a factor in any significant way. Then this might be a great time to look at how is the stock market reacting to the news, and like if this is a company that you're already a bit familiar and maybe you've done some sort of analysis on it, so you know that where your like entry price is, where you would ideally like to buy it, this might be a great time that it actually dips to that level.
Yeah, I mean, you might even be invested in this company already and see this as a time that, wow, this stock is on sale, so to speak. Because I think there are so many examples. I don't think we need to start actually making examples, but there are so many examples of even like Finnish companies that were involved in some kind of scandal or something that was really like, it was bad. It was usually something relating to bribery or something like that, something relatively unethical. And I'm not in any way saying that that is acceptable. The partial problem about this is that it usually blows over after some certain amount of time. So there is like this short window where actually they have very bad press, the stock price plummets, but then it might rise back up because people don't have very good memories, so they're not going to remember this about this certain company for an extreme amount of time, unless the scandal is so bad that it's irreversible and it's permanently going to damage the companies. But that is not so common. Usually these kind of scandal cases, like for instance, sadly bribery, for instance, they usually blow over after a while, and a lot of people don't even realize it or care about it for a very long time. They usually pay a fine and then that's pretty much it. But for a moment, it might actually hurt the stock price of a company in the short term, and that might be a great possibility for you to instead jump in.
Yeah, and if we disregard the ethics, because quite a lot of times it doesn't even have to be that bad. The general idea here is that this alone is not a way for you to find a great company. This is more of a way for you to find sales. That's the idea here.
Exactly, and that's why it's on number 4, and we rank these in importance, so to speak.
Yeah, I think that's a great point. And finally, just something short about screeners. If you haven't heard about screeners before, basically it's just that you can fill in some parameters that you decide beforehand. Maybe what do you want the price to book value to be, whatever, like sky's the limit here. Like, or
what the financial ratio is.
Yeah, so you can decide what sort of companies you want to find. The scanner is going to basically look through all of the listed companies and then spit out companies based on your parameters. However, I am not currently really using this model, and I think it can be quite tricky for someone who's super new to it. Also, since at least I recommend that you always understand the company as well as possible for a multitude of reasons. I'm just going to mention something quickly here, why I think you should understand it. First of all, like, how are you going to invest in something you don't understand successfully? Like, you're probably not going to have a great time doing that. But even if you do, even if you manage to find something great, like, it's not going to go up every year like clockwork. And if you don't understand what you've invested in, it's going to be that much harder for you to keep believing in it and stick with it if it has like 1 or 2 bad years. And especially if you don't understand why it has bad years, like, it's just going to be very difficult for you. So even if you use scanners or whatever method you use, you still have to understand the company at least a well enough level to sort of know what's going on.
Okay, so if I'm understanding you correctly, these screeners are like a way to search for particular financial ratios or multiples, some number that you're searching for, and then you can invest into them through your broker, for instance, what you have found them. And I definitely see your issue as well. If you're just blindly investing into these companies that they spit out, you don't really know anything about the business or what they're doing. And one concern I also have is, are these financial ratios, are they to date or are they historical?
Yeah.
Or what are they? Because if it's just to date, maybe instead of the company having a really bad year, maybe it had a really good year, and then you based your investment decision on that really good year, and then it just have bad years after that. So that sounds really risky to me. Anyway.
Yeah. But here, like, I know a lot of people use these, and I haven't used them too much, so I'm not like, I can't speak too much about them. I know they can be efficient. It's just like that I don't. This is a me problem now. This is probably not a problem with the screeners once you know how to use them.
I would say that they probably are really good at what they do, meaning that they are screeners. They can show you interesting companies that you then can dwell deeper into. And it sounds like they could be good for that, but I would never base the investment decision blindly on a screener.
But neither should you base your investment decision on any one of these 5. This is just to find potential candidates. But lastly, I wanted to include one specific great scanner or screener that I know about. Again, full transparency, I haven't used this, so I just know it's a famous one, and it's called... or it's based on the magic formula, which was coined by Greenblatt, who is a famous investor. And it basically just looks at, I think, 3 or 4 key requirements or key parameters and ranks companies based on how well they do on these 3 or 4. As you can see, I don't have the greatest understanding, but it's all in the little book that beats the market. So if you're interested in, you can just Google it. This is just something I wanted to include because I think it could be a great tool for you. That might be a thing that you want to Google and just have a quick look into if you find that interesting. Okay, so finally, let's just quickly summarize what we've talked about here and the main points of today. So today's video was about 5 great ways that you can use, 5 great methods you can use to find companies to invest in. First thing we talked about was recommendations. Secondly, we talked about what is hot, what are the current trends. Then association. Personally, I think this is one, even though we didn't put this on one, but to me this could be higher on the list. Like, I think this might be a great place to start, especially as someone who is totally new to investing. Then bad news about companies. We talked about this was a bit counterintuitive. The idea here was that this might just be a good way for you to find deals, because if something bad has been said about the company, the stock market might overreact, plunging the price maybe a bit too low. So that's something that you could look out for as well. Screeners, scanners is the final thing we talked about. I think it was very evident that neither of us have really used them too much or know really anything about them. I just wanted to include them because I know they can be very effective. And in addition to that, or in relation to that, I also mentioned the magic formula. But again, finally, I just want to emphasize once more that these are 5 ways to find potential candidates. As Marcus said in the beginning of the video, we try to catch as much fish as possible and then we sort out the good from the bad. And this is just us trying to catch as much fish now. So this is the very first stage. We're gonna do follow-up videos.
Yeah, how are we gonna decide which fish to keep and which to throw back into the sea?
Yeah, so don't buy anything based on these things alone. But now, this is the very first stage, and this had also been requested actually by one of our viewers, so I definitely wanted to make a video about it then as soon as possible.
Okay, so if you found any value in this video, like maybe how to start screening for your own companies and where you want to invest, then please subscribe to our channel. It would really mean a lot to us. And also remember to leave a like on the video, and please leave a comment on the question Lucas asked.
Yeah, what are your ways to find great companies to invest in? We would love to know. Maybe you have something here that we didn't mention at all that you think is way better. Let us know in that case.
Yeah.
But I guess with that, we've come to the end of the video. Hope you got some value out of it, and all that's left for me to do is wish you guys happy investing.
Happy investing, guys. And fishing.